Ian Hocking from the Hocking Homes team. Thought we would just do a quick recording here. The Bank of Canada raised interest rates this morning by 25 basis points, which means that all the floating rate mortgages out there are going to be reset. Not all the time does the 25 basis point hike get passed along by the banks, but given where rates are, we would expect that the majority of banks will just be about to increase their rates to you if you have a floating rate mortgage by about 0.25%. So what does that actually mean? Well, on our website at hockinghomes.com, if you go to the Smart Buyers tab, you'll find that there's a tab called Calculators, and under the calculator there's a really nice mortgage calculator here which allows you to line up several different scenarios side by side. So we're in the city of Barrie. The average price is give or take a bit about $1 million. It's probably just less than that, but we're going to use $1 million as our example here because it's a nice round number. So if you were thinking of buying a house for $1 million and you were putting down 20%, so that's 200,000, you would need a mortgage of 800,000. And if we were going to apply an amortization period of 30 years to that, and using a mortgage rate of 2%, that would mean that your monthly payment would be somewhere around 2,954, and it might be slightly different, but it's about 2,954. So what would happen if we actually used exactly the same scenario, but instead we had an interest rate of 2.25%. So $1 million purchase, 20% down, $800,000 mortgage, and the rate is now 2.25, which is 25 basis points higher than the 2%. Your mortgage is about to go up by about $100 a month, give or take. All right, so if you have a mortgage, you're going to be paying an extra $100 roughly per month, or $1,200 per year. If you're in the market to buy a property, what does that do for your purchasing power? Well, if your mortgage broker or bank has said to you, you can buy a property for about $1 million with 20% down, how much can you now afford if your maximum payment was 2,954? So based upon this scenario, 2% rate, $800,000 mortgage, the bank says you can afford 2,954. Well, we just saw that it's now 3,054 or thereabouts. So if we have to get back down to 2,954, what happens to this $1 million number up here? How much less can we now afford? Well, let's have a look. I mean, I kind of did this earlier just to make it nice and easy, but it goes down to about 965,000. I'm just going to change this back to 20%, not 200, 20%. And if we go to column number 3 here, and we can see here now we've got this $965,000 is our now purchase price, 20% down, so we're putting down now 193,000, not 200,000, which means our mortgage has gone down to 772,000 from 800,000, and we're using a rate of 2.25, so it's the same increased rate, and you can see the payment is now back down to 2,950. So what this means is that your purchasing power approximately on average around the Barrie area just shrank by $35,000 due to this 0.25% hike in rates. So does that mean that all prices are about to come down by $35,000? Possibly not. Will it affect some buyers' ability to purchase? Almost certainly, definitely. And is this the last interest rate hike that the Bank of Canada is going to do? And the answer to that is almost certainly no. When's the next one? Who knows? I suspect the Bank of Canada will be typically late to the game because they usually are, which means they'll do too little too late, and hence that usually means that inflation continues to get a little bit out of control. Inflation forecasts this year are now going up towards 6%. Currently it's around 4.5. I suspect it's going to be at least 6, and if anybody's tried to buy gas recently, you'll know for sure that it's not 6. It's a heck of a lot higher than that. So with that in mind, I would expect rates to continue to rise throughout the year, possibly another couple of times throughout this year, and that means that this purchasing power is going to shrink. For every 25 basis points that the government raises rates, the purchasing power is going to go down by approximately $35,000 if you're looking at a $1 million purchase. I know there's lots of people that will argue that maybe it's not quite exactly the right number. I would agree, perhaps not exactly quite the right number. There may be some other factors in there, but this is just as a general guide, just to tell you really what's happened this morning and how this may affect the market. It's Ian Hocking at the Hocking Homes team, and have a wonderful afternoon. Thank you.